Hey YouTube, this is Zach with Achilles Financial. Today I want to talk about Palantir Technologies Inc. This is the company that we've seen just a deluge of information and publicity about. And I wanted to talk about them because they announced earnings today. And I have been pretty bearish on a number of companies over the past 2 weeks for good reason. And I think that Palantir has consistently been a company that at a point in time was overvalued. And right now, based off their earnings today, I think that we have a good buying opportunity if you're looking for, and I continue to harp on this, like a 2025 portfolio. I do not look at these investments as a short-term flip opportunity, although I do believe the opportunity is there. What I'm looking at is for a company that I am looking to hold until 2025, and then we can continuously reevaluate as we go. And I think that Palantir definitely fits that capability. At this point in time, I don't know if I'm going to make an investment, although their fundamentals are definitely encouraging. So what we have here is the Form 8K. This is an SEC filing that they produced today. So if we talk about some of the items that are in here, I want to talk about some of their Q1 highlights, which are definitely included here, where they grew revenue 49% year over year to $341 million. Now, something that I like to talk about whenever we're looking at these type of companies is how are they growing revenue so quickly? Now, they did utilize a lot of the funding from prior year when they went public via direct listing to be able to finance this funding. Despite that, their numbers actually look very, very strong. So I think it's important to note that their revenue is growing at an insane rate. Keep in mind that this is a company that specializes in data. And so the more data that they aggregate, the more they are going to be worth, the more valuable that they become. The other thing that I would highlight is they had a very high free cash flow. You can see the adjusted free cash flow of $151 million, which is up significantly from last year where they actually had a much higher loss. They still are right now highlighting a loss per GAAP, generally accepted accounting principles, on a diluted basis of 7 cents per share, which is pretty substantial. One of the things that I would highlight that a lot of this loss is coming from, though, is pretty much associated with both stock-based compensation. There were a lot of sales of stock over this past quarter. And by this past quarter, I mean Q1. But the other thing that I would highlight that we saw a lot of for Palantir is the fact that this is a company that is continuing to invest heavily in the marketing side of the house. And whenever you're investing that much money in marketing, still trying to develop a name brand for themselves, you're going to continue to see some struggling with profitability. A like-minded company would be DraftKings. What I want to highlight here, though, is the fact that this revenue growth number is huge because we're looking at a Q1 number, and that definitely goes to justify that there is huge growth, compound annual growth associated with this company. Now, what we're looking at here is they actually had a very strong Q2 expectation, although I think that this is overall down a little bit from what analysts were originally expecting at this point in time. So we're still looking for the annual revenue growth of 30%. This is super important because when you grow almost 50% the year prior, when we look at this number right here, it's important to note that as a company gets bigger, for them to match those same annual growth rates, that they have to bring in a lot of money to do so. So we're going to continue to watch that and make sure that we are keeping track of that information as we go through the presentation. So I want to just talk about some of the different financial statements that they've uploaded. The important thing I want to highlight here is revenue overall went up pretty significantly year over year, whereas the cost of revenue actually did not go up by nearly the same amount, which just showcases that that margin is readily available and more than capable of meeting demand. What we did see, though, and this is where a lot of that cost came associated with it, is we saw a huge increase, nearly $40 million worth of sales and marketing. We also saw R&D increase exponentially, and then the general administrative. Generally speaking, when you see general and administrative, what we're actively looking for is the fact that A, we saw a lot of stock-based compensation, but B, they are hiring to meet the demand that they are readily pushing through. Because of that, we are showcasing a loss of operations. So if we can address or wash out some of the stock selling that's going on and some of the pain points, then and we focus on the revenue, I think that is the harder part of this equation. What they need to do is make sure that they're able to maintain their profitability on the revenue side in the actual business, and they're going to look in a very, very strong point going forward. Now, all this being said, we need to look at some of the things that we are actively going to be watching going forward. So what I want to do now is actually transition back to TD Ameritrade. So if you wanted to know where I found that information, I'm on the SEC filings. I was looking at the 8K, which was released today, and this is on TD Ameritrade for Palantir Technologies. The other thing I want to highlight, because I've come to really like this chart, is this is the insider selling that we saw again ever since the company went public. There has been a lot of insider selling. This is understandable. You just have to remember that it's important when you see insider selling, you need to take note of that. And they had a lot of insider selling over the course of the past 3 months. So when we're watching this, I like to highlight that you need to pay attention to this because generally speaking, they know more than we do. But just be aware of it. Again, they did become probably millionaires and they're going to be taking some of that profit. This does not mean that they are selling all of their holdings. You can actually go in and look at some of the insider buy and sell reports here to get a better understanding of what we're looking at. But let's talk about some of the fundamentals, because this is non-inclusive of what we saw last year or what we saw the presentation that we were just looking at. But total revenue Q4 of $322 million was actually lower than what we just saw in Q1. So as long as that trend continues, that's going to be really, really huge for the company, especially since Q2 of last year was their largest quarter. I'm interested to see if that continues going into this year. So we want to see that profitability continue, because right now we're looking at that total income, net income continues to be negative, and negative in a big way. So we'd like to start seeing that circle back around so that we can achieve profitability, because that is how this company will really pop off. Right now, when we look at the valuation, and this is on a trailing 12 months basis, what we see right here, this means that we are taking the sales of the past 12 months. Their price to sales is really high right now. What we need to see is this number continue to change and drop lower. So right now, I think what we want to see with the numbers associated with today, if this number can get back closer to 25, then I think that there's a lot of benefits there, because it will be more appropriately priced for the overall company. We need to focus on the fundamentals. And the reason I highlight that is because, like we just saw with the tech pullback, these companies are pulling back to the same level that we saw them at from a fundamental analysis perspective. Can their revenue, can their growth continue to support this? The reason why I say I'm okay with the price being higher than most of the industry is if you look at their overall growth rate, they're growing incredibly quickly from a revenue perspective. I don't necessarily just want to focus on the most recent quarter, because this isn't necessarily reflective of their scale, and they don't have 4 quarters for the revenue growth that we can utilize. However, we do have a lot of profitability. Right now, we've got that gross profit of nearly 70%. We need to see that translate down into the operating profit and net profit margin, similar to what we're seeing in the industry. That is how you make sure this company has the capability to really grow and scale, is when they're actually profitable. If you take this company with a 70% gross profit margin and you can turn it into a net profit margin of 15% or more, then that's a lot of money that can end up going to the shareholders, can do buybacks. I understand that the company is looking to grow aggressively right now, but there's still a lot that they need to be looking at in terms of taking care of the shareholders, instead of just looking at some of the stock sales by insiders. If I felt that a lot of that money was going towards growing the business that would be returned to the shareholders, that is really where it would add a lot of value. So we're going to continue to watch this, but it's important to note the company skyrocketed earlier this year and touched $40 a share. I like under 20 right now. So this is my personal opinion. I'm by no means a financial advisor. I like the $20 range. If it dropped from here into weakness, I still think that there's a lot of value. If it gets above 25, I'm just personally not going to be touching it. It doesn't really have what I want out of the stock right now for me to really go after it if it gets higher than $25 a share. but there's a lot to love about this company, and they have a lot of growth opportunity. I think that this is actually a really nice entry point if you were to start looking at a company for a long-term portfolio 2025, because their growth projections continue to be really, really high. And if they can get their profitability in line, then there's a lot that's going for this company in a very, very positive way. So if you find this content helpful, please leave a like and subscribe. And if you want to talk about this stock a little bit more, feel free to join the Discord in the description down below or drop a comment. Thanks, everyone. Talk to you later. Bye.